Hello and welcome to another update video about optimism. So looking at the bigger picture first, this is the daily chart. We can see that it's basically not a trending chart overall. It's just been moving sideways since it started. So this sideways action, again, it leaves a lot of room for interpretation. It's a chart that still needs to prove itself. Basically, there is a bullish scenario on the chart, which is the white one here. Yeah. In this scenario, however, we're dealing with a huge, if at best, it would have to be a huge diagonal. So initially, price rallied in a corrective structure in a wave 1, came down in a wave 2. Basically, we're now in the third wave based on that bullish perspective. And in the third wave, price rallied already in an A wave, yeah, came down in the B wave, and would now be able to move up in a C wave. This would be the bullish interpretation. So the problem is, however, this is a chart that seems to be moving in 3-wave structures. So it is not very clear in terms of probabilities. This is a bit of a hopium wave count, but I can also tell you when this chart or when this scenario will become very, very unlikely. Very unlikely. Yeah, at the moment it's fairly balanced probabilities, I would say, but this bullish scenario will become very unlikely if we get another break below the 10th of June low of 90 cents, because that's the 78.6 Fibonacci retracement level. As long as it's holding that, technically it can move higher in a C wave. So how would that look like? So in this bullish scenario, which we've had on the chart for a while now, price would have topped, in 3 waves, but it would have to be a wave 1 of wave C. It would be a 3-wave move, so very unclear probabilities. Then wave 2 came down here. We would now do a third wave, which would also be an ABC structure, so very choppy, a rocky road. Then there should be a fourth and a fifth. So we would need to see 5 waves in the C wave next. Then we would get an ABC structure in a fourth and an ABC in a fifth. I mean, this is the most bullish pathway. Works only as long as we're holding the 90-cent level. I think that gives you a very, very clear, let's call it make or break point. This is the very bullish scenario. However, not really high probabilities because we haven't seen any impulse to the upside. Okay, I have to say that. So without impulsive price action to the upside, these structures are very fragile. And while it's possible, I mean, you can always go long with a stop below 90 cents if you like to do that. I don't tell you to do that. I find this chart offers poor probabilities. And with Elliott Wave, you don't get a very clear structure. Okay, so that, however, doesn't tell you that Elliott Wave isn't working. It tells you simply that Elliott Wave gives you clarity that this chart offers a lot of different avenues, a lot of different directions. That gives you a lot of good information because it might mean that you don't want to trade it at all or just provide or ensure that you are very cautious. Okay. So very, very important. The bullish scenario, of course, exists, but we would need to hold the 90-cent level for that. In fact, if it breaks below the $1 level, the 78.6 Fib level of this move between the 10th of June and the 8th of August, that would already be a warning that the bullish scenario is not going to play out. A break below $1 and then below 90 cents is obviously going to invalidate it. Then we've got a wave count, which is the yellow one, which would lead to another bear market low. However, for this scenario, we want price to stay below $1.67. A break above 167 could shift probabilities more towards the white wave count. And that will be even more the case if price breaks above $1.84. Okay, so these are the two main scenarios. At the moment, both have, let's say, high probabilities or low, it doesn't matter, they're fairly balanced, okay. These are the two main cases, I would say, and it all depends on the relevant pivot points. I already gave you the relevant pivot points for the bullish scenario, and again, for the bearish one, ideally, price would stay below the 8th of August high at $1.82, but a break above 167 will already give you a warning that something more bullish is going to play out. Now, looking at the short term, we did expect after a break to the downside of this wedge pattern, we expected a breakdown to around about $1.16. Happened, recovered very quickly. Then we formulated here this resistance area. Price is now in resistance. Basically, we have price exactly where we want it. And now we need to be watching if there are reactions to $1.56 or $1.67. A break above that would send it to $1.82. And yeah, it's a bit of a wait and see with this one. Can we break out? And if we break out, especially above 182, then we could look if price is rallying higher in this C wave. There are simply too many probabilities on this chart, but so far it's been going quite well, yeah, with a break here below the wedge pattern, hitting the support area down here and now rallying again into resistance. I think we need to see if we can see a negative reaction now or bearish reaction so that price can continue its pathway to the downside again. This is at least standard resistance. And you can also see that on some time frames, not the 4 hour, but the 1 hour. So price is back in the bullish range. So it's likely to continue a little higher. That's the 1 hour. Yeah, not overbought yet. 4 hour chart also not overbought yet, but also actually in the bullish range. So can still push a little higher. That would anyway be the expectation at the moment. That would be the expectation at the moment for it to go a little higher. Again, $1.56 and $1.67 are the next resistance levels. And then we have to take it from there. Yeah, I mean, any strong reaction to this fib level area, yeah, if you see the first 5-wave move to the downside, it could indicate that this third wave has started, because it would also be another 5-wave move, this third wave, yeah. Then we should see a fourth and a fifth. So anyway, I think the key is to pay attention to these pivot points. Bigger picture, there is just no clear outlook for higher. Again, if you are looking for a setup for higher, I gave you the relevant pivot points. That's the value of the analysis. But this chart is too choppy. It could even form a huge triangle. Okay, it could even form a huge triangle. Also, when we are moving higher, you can see the trend line here. Pay attention to that trend line, because price might really be caught in an Elliott Wave triangle. As you can see, it's not really a trending chart. So as it's hopefully clear with the with a non-trending chart, you're dealing with a price range. And it's even more complicated when you're dealing with a potential triangle. So I don't see a clear upside trajectory here. There is one, but it's just not very clear. It would first of all need to prove itself. Yeah, that's the problem. I mean, you won't really have, and that's unfortunately the truth. Yeah, you won't really have a very clear, due to the structure and history of the chart, very clear upside trajectory until you start to see that price has finished 5 waves up as indicated here. Yeah, that's what it would need to do. And then we can look for the ABC pullback. Now that will take a while. That will take a while. That's just what it is with this chart. You can still speculate for higher if you want to. Just be aware of the $1.90 levels. That's my update about Optimism. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.